Welcome to the Money Mindset Podcast channel. I am Natalia, where we talk about your money and building wealth, and we start with the basics. So today we are going to talk about credit. So what is credit? How can credit impact you? How can you have a good credit score? So we're going to go ahead and dig in. So the first thing is, what is credit? So credit is when you borrow money for things that you want for now and you end up like paying it back later. And so when you do that, it comes at a cost and they charge you what they call interest. So this is the price that you pay for borrowing the money that you didn't have at the time. So you would probably say, well, why do I use credit? Like, why is it important? So you want to make sure that you maintain a good credit rating because it helps you when you want to take out a loan, to borrow a car, or buy a home. You need credit to be able to rent apartments and even secure some job opportunities. But the point is, when you do borrow, you want to make sure that you're paying it back on time. So it shows lenders that you're trustworthy. So what exactly does like the credit bureaus look at? So first of all, the credit bureau is like a credit reporting agency. So it's their job to collect that information and maintain your financial information and information on people and businesses. That's what they do. And their main job is to gather that data, and they gather it from lenders. This is people that lend you money, from creditors, people that you do business with, and even public records. So they compile it into a credit report. So there are actually 3 credit bureaus. The first one is Equifax. The second is Experian. And the third one is TransUnion, right? So these, like on these reports and what they're gathering, they want to make sure that they're providing like a thorough details about how you are with money that is loaned to you. So they keep track of things like your past, like your credit past, and they're looking at like your borrowing habits. Do you repay on time? So if you borrow something, are you paying it back on time? They keep track of like active accounts. So that's the accounts that's currently open. They'll show even closed accounts when you've closed out credit. For example, if you paid off like an auto loan. So they'll keep track of that. So they're really keeping track of all your debts, any public records. So if you didn't pay somebody back or you filed for bankruptcy, they'll keep track of that on your credit report, and also liens. If you didn't pay somebody back, they can put a lien, and they'll show those liens on your credit report. So again, with the credit bureaus, they give you, and basically they're just trying to figure out if you're credit worthy and whether they should approve you for a loan. So with credit scores, they range from 300 to 850. So the higher, the better. So they base it on things like your payment history. Again, if you're paying your bills on time, your credit utilization. That means if I have a $1,000 credit card, am I maxed out at $999 or $1,000, or am I keeping that below the 30% of just saying, okay, well, I'm gonna not spend more than $300 on this card. So they also look at like the length of your credit history. So as you probably hear, it's not a good thing to just always go and open up a credit card loan back to back, because they're looking at the years, the longevity of it, like how old is your oldest loan account or your oldest credit card, because that plays a factor. So you don't want to have everything being so new, but you do need to be able to establish credit. So it is understandable if you do open a credit card or you do take out a loan, and just making sure you're making those payments timely. And they also look at like the credit mix. So for example, if you have a home mortgage, or if you have student loans, or if you have a credit card or auto loan, they're looking at the mix, the different types of credit, and they put weight on that. And then they also judge you basically if you have too new a credit. So sometimes you can get declined because all the credit cards that you have are just way too new and they don't know like how you are handling that responsibly. So some tips for improving your credit is to always pay your bills on time. Use less than that 30% that we talked about, like on a credit card, not necessarily a loan, but on your credit cards. And then keep old credit accounts. So if you do open them, like I said, they're basing it off of longevity. Don't be so quick to close them. I'd rather you not use them or keep the balances low, but do not close them, because every time they close, you get like a ding to your credit. Avoid applying for too many credit cards at once. Like I said, there is a window of time that you can apply, that they can only give you like one hard loan or hard inquiry versus a soft inquiry. Just meaning that a hard inquiry is when you've actually like tried to, I'll give you an example of a hard inquiry. Like, I'm going to go apply for a home mortgage loan. That's a hard inquiry. And sometimes they do soft inquiries like, oh, based on your previous credit, we don't have to like do a hard pull because we know that we can see that you've been paying. So sometimes, like, I have a credit card with like Capital One, and if I'm opening up a second one, they could pull like a soft inquiry. And then again, why credit matters, because the reason credit matters is because it saves you, if you're using it and you're using it wisely, it could save you money over time based on the interest rates that you're receiving. So the interest rate that you may receive on a home loan can be the difference of 14% with, a hard money lender, or just depending on who you borrow from, compared to like maybe 6% or something, depending on what the market does. And it also just depends on, like I said, how you're paying your bills and if you're paying them back on time, and just seeing if you're overall credit worthy. And then it also helps you just better qualify for better financial opportunities. So that's just something that we want to be mindful of with credit. Just making sure. Is there anything else, like when you are like getting approved for loans? And again, they're looking at your payment history. They're looking at your account balances, okay? Because they want to make sure. They are looking at when the account was opened and the date of the last activity. And they also look at what they call is the high credit on your account. So like I said, if your max is $1,000, they're looking at how much room is between what you've borrowed and what the actual max amount is. And sometimes not sometimes, you will get dinged if you go over that max amount. And like with the debt collections, they actually have like a special team of people that can help track down, when people owe money and they're not paying it back, and they'll help them, like the debt collectors, to get like their money back. So again, bankruptcies, that's when people have probably borrowed something that they couldn't pay back and they became too overwhelmed and they needed help. So they'll file for bankruptcy, which is fine if you have to do it, but you really do not want to be in a position where you have to pay back a bankruptcy or file for bankruptcy. And you don't really want to have to be in a situation where you're getting penalized or getting a lien or stuff is going into collections, because it can take a while to improve your credit score after that. And then you have to turn around and just prove that you are a borrower that will pay back their money and pay them their money back on time. So just know that if you are choosing to use creditors, or if you choose to lend, pay them back on time. Be mindful of how you use it and why you're using it. I know people, like, I went to college and they were just using it for just to live on. Like, I'm talking about just money, not because they needed it, because maybe their parents had put them up in a dorm and they can eat the lunch meal, pay them, but they were just using it because they had a booth set up on the college campus and they were just giving out credit cards. With really no knowledge of like how to use it and how to use it responsibly. So just make sure that you understand that when you're doing this under your name, right? So we want to make sure that we are doing like what we need to do to maintain a good credit. We want to make sure that we are borrowing and we're doing it responsibly, that we're making sure that we protect our credit, and making sure that, just for identity theft purposes, making sure that we protect that and protect what we call in the government PI, personally identifiable information. You're making sure you know where your social security card, where your license is, any identification, just keeping track and making sure you're being mindful of like not leaving mail around that might have like your personal information in it, because we don't want you to be a victim of identity theft. And just remember that if you're doing all the right things, hopefully you're improving your access to credit, and just being able to really educate yourself over time on how to use it. And, before you take a deep dive in, and just understand, don't get like in over your head. And based on some of their 30% interest rates, you can be possibly paying it back for like a long, long, long time if you don't borrow responsibly. But other than that, like I said, we talked about the credit score of, 850, and just the impacts of that, and just making sure that we understand what we're doing and why we're doing it. And never, ever, I just say never, ever use credit and sign like as a co-signer, as a secondary. I don't advise it. But you can do what you will, but I don't advise it, because that's when you take on somebody else's. You're signing up to take on somebody else's responsibility of paying back their bills, and you have to make sure that even if they say, "Hey, it's no big deal, I'm going to pay them back," you have to make sure that you are able to do that, just in case that person does not follow through and they don't have the ability, or they choose not to pay their bills back on time. So just be mindful of that. If somebody ever asks you to, be a secondary on a loan or co-sign, please just think about your financial situation, your credit, and how you want to be responsible with that.